Growth stocks are awesome because this is the type of investment that you could put a little bit of money in today and it could just go to the moon. Maybe you put $10 in and that'll be $1,000 in a couple of years. The two fundamental types of investing techniques are either value investing or growth investing. Growth stocks are shares of companies that are expected to grow at a significantly faster rate than the rest of the market. So while these stocks probably don't have a dividend or they have a very low dividend, the whole idea here is appreciation. I'm Professor G and I'm a real live university professor and I specialize in personal finance. On this channel, I make investing simplified. For today's video, I've compiled a list of 5 growth stocks that are ridiculously cheap. And when I say cheap, I don't mean the actual share price itself. I usually mean something like the PE ratio or the fact that it's just literally on sale from where it was even a year ago. Number 1 for me is called Block. And this is a company owned by Jack Dorsey that used to be called Square. Now this company, to be honest, is not doing so hot when you look at it purely financially. And there's a couple reasons for that. And when I say not doing so hot, it literally has a PE ratio of 0 because actually their earnings are negative. The negative growth trend springs entirely from the swooning cryptocurrency market. Block's second quarter revenue fell 6% year over year, but if you back out the contribution from the weak Bitcoin prices, the core business grew by 34%. If you haven't really been following Block, they invested a lot into Bitcoin and cryptocurrency. Jack Dorsey thinks that there's a lot there in regards to blockchain and Bitcoin specifically. And so right now with the cryptocurrency market pretty much taking a dive, it's messing with their company. But their main line of business is actually doing very good. The Cash App payment system posted 29% higher gross profits in the second quarter, and the recently acquired Afterpay payment plan service contributed $150 million to Block's gross profits. The issue here is really that Bitcoin is just diving so hard, and so investors are a little scared to align themselves with a company that's invested so much into this asset class. But right now, we're kind of in a thing called the crypto winter. And so once we pass out of this, I believe that the companies that align themselves with this asset class might be the ones with the last laugh. And Jack Dorsey might just look like a genius in a couple years. To be fair, this is a very risky play and it should be treated as such. So don't go and put all of your money into this one. But this one definitely has that growth potential that I'm looking for. The next growth stock on my list is an interesting one because most of the time these growth stocks are going to be heavily technology based. But this one's actually in the apparel industry. Right now, this company's stock is actually down 25% from a year ago, so it's on a nice sale. It's right under $300 per share, and this company is called Lululemon. Many analysts expect Lululemon Athletica Inc. to grow earnings per share by an average of 21% per year over the next 5 years. And the reason why they're saying that is because they're really starting to penetrate different markets and differentiate themselves big time from other apparel companies. They used to just be a yoga company, they used to just be a workout clothing company, but now they have professional business attire and are very much known for the quality of their clothing. I know for me personally, I love to work out and I can't get enough of their shorts. They stand the test of time, they're a very quality pair, even though they're a little more expensive, they last so much longer than other companies. I'm definitely a customer of Lulu, and at these prices, it's looking very interesting as an investor as well. Number 3 is going to be one that you've heard a lot about recently, and when you think growth stock, this is one of the ones that definitely rises to the top. It's one that's been in the media, it's been in the news, people have gotten in trouble over it. This company is the global leader in artificial intelligence in hardware and software. It's also down 42% for the year, so it's on crazy sale at about $120 per share. This company is called NVIDIA Corporation, and they offer solutions for graphics, computing, and networking. Given the demand for GPUs, the company's earnings are expected to grow by an average annual rate of over 23% over the next 5 years. In Q2 of 2022, the company also reported $6.7 billion in revenue and reported a normalized earning per share of 51 cents. payments. As we just lean more and more into this technology age, a company that's the market leader, especially globally in something like this, is something that I definitely want to be a part of. And when it's on sale like it is right now, this is just the time. Now, number 4 is very similar to number 1 in that it is a digital payment solution and digital payment platform, but this one's just a little bit different. This stock is at $90 per share, which is actually down 65% for the year. And now this company is the leading digital wallet in North America and in Europe. And this company is PayPal. PayPal is the most accepted digital wallet in North America and Europe, and it was the most downloaded mobile finance app worldwide in 2022. That success stems from its trusted brand, its reliable platform, and its ability to engage both buyers and sellers with its two-sided payment network. One of the big issues with this right now and why it's down so much is because eBay migrated away from PayPal or using PayPal. And so that was a huge part of their business. And so a lot of investors saw that as a scary move and also thought maybe PayPal might die out because of that. But management says the eBay impact will be minimal in the second half of the year, and cost-cutting measures should drive operating margin expansion in 2023. With an addressable market of $110 trillion out there, a company like this that's a leader in this digital financial landscape is definitely something I think you should be keeping on your horizon. And when it's down over 65%, again, nice little sale for something that could definitely grow into something crazy. Now with all of these, like I said at the beginning, they may be a little bit risky, but in investing in general, the way that you're going to be able to really get that generational wealth and change your life financially is not going to be to locate the absolute best stock out there. It's going to be able to have more money to be able to invest with and be able to stay consistent. So stick around to the end of this video because I'm going to teach you how you can actually have more money to invest with. The 5th stock on my list is definitely the most expensive in actual share price, but it's one that you definitely want to pay attention to, and it's probably one that you use often. The reason why I really like this company is their competitive advantage. There's really nobody else doing it exactly like them or in the capacity that they're doing, so they really have an edge over the market, and those are the types of companies that I like. This company is a holding company that has 6 primary travel and hospitality brands: Booking.com, Priceline, Agoda, Rentalcars.com, Kayak, and OpenTable. Together, they were responsible for $27.3 billion of travel services booked by its customers in Q1 of 2022, which is 129% higher than the year prior. This company is called Booking Holdings BKNG. You're looking at paying $1,685 per share, and it's down 31% from a year ago. So again, as far as individual actual stock price, that is an expensive price, but the stock itself is on sale and it's got such competitive advantage that long term, this thing could really grow. This company is just stacking cash and it's just added to its free cash flow, and in business, cash is king. And speaking of cash, the way that you're gonna be able to get ahead and hit that financial freedom and be able to be at a point where your passive income is bringing in more per month than the amount that you're making in your paycheck, the only way that you're gonna be able to do that is by investing more money today. It's all about doubling down on the things that I talk about in this video here, and it's how I'm able to invest almost $50,000 per year, and I'm going to teach you exactly how to do it so you can get there as well. Watch this video now, put it into practice, and watch that stock portfolio go to the moon.